So that's another interesting read. Hours worked down. I think it's a participation rate we need to talk about, though, with Simon Boulton, who's Director of Recruitment Firm Aequalis Consulting. Great to have you on board, as always. Thank you so much. Yeah, so 6.4%. How do we read that, though, when you get actually an addition of 14,500 full-time jobs? Obviously, the loss is from part-time.
Yeah. And
also, you've got more people out there looking for work. Good or bad read, then?
Again, it's always mixed messages, Brooke, but I think that's taken everybody by surprise. Consensus had the rate to stay at 6%. I think 6% was seen as a sort of comfortable ceiling that everybody thought we'd get to. To jump 6.4, that's a big increase on a month-by-month basis. I don't think we've seen an increase like that for some time. So I think it is a real surprise. I think that people were expecting a much better read on more permanent jobs created, the rate probably staying where it was. So not the first time we've been surprised, but a really interesting read that we didn't expect today.
Yeah, because I always say you're on the coalface, right?
Yeah.
You're speaking with employers, you're watching the job seekers. You've actually been picking up more positive signs about the second half of the year.
Definitely. A recent forum that we ran at Aequalis with the group of CFOs, hiring intentions for the second part of this year were much more confident than the first half. I think that people had sat on their hands a little bit through the first 6 months of the year, and there was definitely a sense that the second half of this year there would be hiring activity. So again, this reads unusual. I think it has come a little bit left field. It's not supported by what we're seeing in the market, to be quite honest with you. We are seeing more people in the market. The participation rate is going up. We've got hiring intentions climbing as well. So it's an interesting statistical anomaly that I think we've got.
So maybe I'm just listening to what you're saying. Maybe just a mismatch in timeline. So you're starting to get the employers more confident, but you've already got the job seekers out there looking at the moment.
Yeah, very possibly. And that ANZ survey that they run with the job advertisements, have climbed again. That's really showing very small increases in each month. So there could be that time lag. I think intentions are there. They probably haven't yet translated into the hiring, and then those jobs being created. So, yeah, it's, again, 6.4. I can't remember the last time we were at 6.4. I haven't got the charts and things. But I would say that's, again, the highest rate for some time. Yeah,
I'm going to look for that as well, because I reckon you're spot on. Simon Boulton is with us. He's from Aequalis Consulting. We also have with us Rick Spooner, who's over at CMC Markets Stockbroking. Rick, good to have you on board. I move immediately for the Aussie dollar. Let's think about whether that gets reversed, because, as always with this number, the detail sometimes tells a slightly different story. So just give us your initial thoughts on the jobs read today.
A negative number, Brooke, particularly for the markets, because the Aussie was so extended to the upside going into this. My trader's rule of thumb is to look firstly at the jobs growth figures, because as you've been discussing, the unemployment number itself is clouded by monthly variation in the participation rate. But I'm not sure whether there are any revisions to last month, but generally going into this number, I'd calculated that average jobs growth over the last 4 months was about 8,000 a month. Over the last 6 months was about 18,000 a month. Unless we had a big upward revision, which I doubt to last month's, that's going to bring that 8,000 a month down even further, and that's not nearly enough over time to hold the unemployment rate. The civilian population growing at about 1.8% per annum. So labour force growth is now well below that. And look, against a background of a fairly weak economy anyway, with the mining investment cliff, big deterioration in terms of trade, soggy retail sales, I think from a market's perspective, the first thing that inference to draw from this is that it leaves us in an ongoing environment of low wage growth, a cautious consumer with not a lot extra coming into their pockets, worried about job security. So no change to the RBA policy coming out of this, I don't think. And, pretty negative for the Aussie dollar, I reckon.
And just to kind of add to that, the unemployment rate, I think for the previous month was revised up slightly to 6.1. So we get a 0.3% jump from 6.1 to 6.4%. The other thing just to mention in all of that, Rick, is I wonder, and I've just quite interesting out of David Scott, who's an independent market strategist. But if people are on Twitter, they see him tweet often. He's made a good point. The US unemployment rate is now lower than Australia. We haven't seen it since April 2007. My question to you is how London, how US traders react to that. When they see 6.4% for Australia, does the selling get worse when we head into the evening tonight?
Potentially, I think. Short-term support for the Aussie is around about 92.75. I think that's where the 55-day moving average is. So that's going to be the first test for it. If it starts to break under that, that'll provide its own momentum. But yeah, look, I think that's right. You know, I mean, I may be expressing my own view, but I think the chances are that we're going to see the unemployment rate tick higher. I mean, on your search for historical figures, I can tell you that it was already the highest rate for 11 years. So this is going to push it up well, you know, over into historical records. Yeah.
Well done. Thank you so much. Do we take, the highest in 11 years, you're right, so we kind of make a new record there, unfortunately. I think it is significant that we go above the US. You know, for a lot of us, that doesn't seem to make sense, really, in some ways. The full-time component, just go back to that, the addition of 14,500 jobs. Is anyone going to kind of relook at that and say, well, you know, silver lining, let's just rethink how bad the numbers are? What do you think?
Yeah, look at that. It's always a bit better to obviously see more full-time than part-time jobs. But this also changes around from month to month too. So leading into this on a 6-month view, there'd been significantly more part than full-time jobs. So this is, you know, looking at medium-term history, probably only helping to counter that and balance that up a bit. But it does that fact that does point to the same direction as the higher participation rate. When you start to see things picking up a bit is when you start to see those two things happening. More people encouraged back into the workforce and also more full and part-time jobs. So that's encouraging, but, you know, the overall jobs growth is the big number to focus on, it seems to me, at the moment.
And you've said you don't think there are implications for rates. Do you think, I don't know, economists going to start stretching out that timeline for rate hikes just a little bit with a 6.4% unemployment rate?
Yeah, definitely. I mean, that's right. I mean, I think, you know, the Reserve Bank, this leaves it firmly in a neutral bias. The question is whether they might actually move towards a bit of an easing bias from here. But certainly I think, you know, they, like everybody else now, is going to need to see the labour market pick up. Their own outlook, and I think most people's outlook, is for sub-trend growth. So this sort of softness and worse figure than we need in the labour market is consistent with that. Leading into this, there'd been a bit of a hope that the labour market was going to do well enough, even though the economy was growing at sub-trend. Well, you know, we're going to need to see a significant turnaround in the next couple of months to change that scenario now.
Rick Spooner, it's always appreciated that you jump up so quickly and give us that initial read, especially on the Aussie. Thank you.
Pleasure, Brooke.
Thanks. That's Rick Spooner there from CMC Markets Stockbroking. As employment in Australia falls by 300 in the month of July and the unemployment rate jumps by 0.3% to 6.4%, the highest in 11 years. The previous high was the last month, 6%. So we kind of smashed that record, unfortunately. And the impact for the Aussie is a breach of 93 cents. I don't know if we can show you again, but we're looking at, in fact, where it was initially a fall of 1/4 of a US cent, I'm going to say 0.5% now, because it was about 93.5 prior, and now it looks a lot worse. It's 92.97 on the Aussie. So 93 is breached. Let's not be too dramatic. It breached 93. I think it was only yesterday or the day before, but you can just see the reaction to the headline number, which, as Rick Spooner said, as a trader, that's the one he goes to first, and it was a drop of 300, and of course the other headline number being the jump up in the unemployment rate to 6.4%. Partly explained by exactly what's on screen now, that participation rate jumping to 64.8%. So that was expected to go up, but certainly that's been an even bigger jump than probably was included in those forecasts. So let's just bring in quickly, I think we can bring in Simon Boulton, who's with us from Aequalis, for one final comment, because, Simon, you've been listening to all of that as well from Rick.
I couldn't hear Rick at CMC.
Oh, you couldn't hear it? That's because my speaker's got a problem. So we were just talking about rate expectations. I just wonder, though, for business, how much are they... I mean, we've got steady rates. I mean, markets and traders can talk about, you know, forecasts and timelines for rate moves. But what are you hearing from employers when it comes to hiring decisions about how supported they are by the rates outlook at the moment anyway?
I think that this would obviously put the brakes on a rate hike that people were talking about. One of the things I think you were talking about there as well was the gap between the US and here. And that counter-cyclical sort of nature that we're seeing, our unemployment rate was falling and falling. In the US, it was growing and growing. We now seem to have gone the other way around. And I think as that jobless rate decreases, not only in the States but in Europe as well, it's interesting to see how ours is sort of, not creeping up anymore. I mean, I wouldn't say it was jumping, but that's still a significant rise.
I'd say 0.3 is a jump.
It's a jump then.
It's the biggest jump I remember in a while.
So it's going to be interesting to see what the sort of facts are behind that trend as well.
But, these are... Look, some people, anyone, you can take whatever you want out of these numbers because there's enough silver linings in there as well. But, some will always say these are a little bit backward looking. There's always a lag when it comes to hiring intentions. I mean, what's the kind of lag in terms of a company deciding, we need to hire some more staff here? When will they actually hire the staff? 1 month later, 3 months later, 6 months later? What do you find? I mean,
I always say it's how long is a piece of string, because it does depend on the job, the candidate you're looking for, what they're actually going to be doing, where they're going to be doing it. But generally speaking, I would say, because you've got to remember as well that people are usually on a 1 month notice period. So just with that, I think you're looking at 8 weeks minimum that you're going to be getting people on board for permanent jobs. So you're right, that lag, that time lag will play some part.
So you are more hopeful than about the second half of the year and how jobs will look?
Yep, definitely. And our
what about
clients...
the budget, though?
Yeah, I think that,
some people are still pointing back to that, saying, this is real-world impact now from Canberra and the budget and all of that going on.
Yeah, I mean, I think people were expecting that to be shaken off a little bit with these figures, but clearly not yet. So, I think there is some scepticism behind what the Treasury are doing at the moment. But, this still goes against hiring intentions of the people on the ground out there. People are saying they're going to be hiring more people in the second half of this year than the first. So hopefully we'll see that permanent job creation start to climb. And ultimately, I think at least try and hold that employment rate where it is. But, today's results are a real surprise.
OK. Thank you so much, Simon Boulton from Aequalis Consulting. Official apologies for not sorting your speaker so you could hear Rick Spooner. But that's all right. Simon's very good to us to join us here on the coverage. We also have